Hello, everybody, and welcome back to ABG Investor Days. My name is Adrian Glani, and I'm an equity research analyst here at ABG. Our next presentation will be given by Palle Chevelius, who is the CFO and IR at Nordic Waterproofing. He will give a roughly 20-minute presentation, and then we will have some time for Q&A after that. So with that being said, Palle, please go ahead.
Okay, thank you very much, Adrian. So so let me take you through some slides of Nordic Waterproofing and explain about what we do in our group here. So if I start with our history, let's see, there we go. So you can say that the group Nordic Waterproofing was established in 2011, but we have companies within our group that goes back even to the 1800s when they were founded. So, but in 2011, Aktier, the Danish private equity, acquired Trelleborg Waterproofing and the Finnish installation service part of Lemminkainen Group and formed the Nordic Waterproofing Group. Then in the following years, they continued to make some more acquisitions, but also some restructuring, and that led to, in 2016, that they IPO'd Nordic Waterproofing. Then it was a Danish parent company. And we were then at the Stockholm Nasdaq Midcap, as we are still. And then in the coming years, 2017, 18 and 19, further acquisitions were done. And in 2020, it was. I mean, we all know what happened in 2020 with the pandemic. So acquisitions was not the key matter on the agenda. But what we did that year was that we re-domiciled from Denmark to Sweden, the parent company. So we are now a Swedish listed group. And then going into 21 and 22, we continued the acquisition drive. So in the recent 2 years, we have done almost 15 acquisitions here. So let me see. Yes, okay. Now it's going right. So what do we do? Well, we basically we are organized in two areas. One being products and solutions, and one being installation services. And we to a large extent we do what we are called. So we would work with waterproofing. We have a waterproofing material being membranes in different ways that protect buildings and other structures from being damaged by water. So a large part of our activities is related to these waterproofing membranes based on bitumen, a residual from an oil refinery. But we also then have material being based on EPDM, a synthetic rubber membrane that you can apply on larger buildings. And you can also the difference between these is that basically the bitumen rolls, they come in rolls, and you put them together on the roof, whereas the synthetic rubber membrane you can prepare in advance and have a pre-manufactured, so you can do larger pieces of the roof at one time, actually. Then we also have prefabricated facade and wooden and wall elements made out of wood. So like this structure here, a tower in Norway that at the time when it was built was the world's largest wooden building. I think it's not that anymore, but it was 18 stories high and manufactured in our factory that is not far away from this. And then we also have what you could say green landscape. So if you see green roofs in Stockholm where we are right now, it's quite likely it's coming from us. So it will. You have these, and also more landscaping like roof parks or inner yards, green inner yards. So that we mainly grow in southern part of Sweden. Let's see. There we go. So then our installation service segment, we also then do installation of the materials we have. So depending on the market, it's a little bit different, but we do install our waterproofing material and also our prefabricated wood elements we do install in mainly Denmark, Norway and Finland. Then we have some activity in Finland where we do flooring, like either in industrial floors or even on cruise ships. So if you go on a cruise in the Mediterranean or the Caribbean, it's pretty likely that we have done the floor on the cruise ship for that one. We also have a company doing metallic facades and eaves and safety system for roofs in Finland that we install. And then we also have a company in Finland where we own 65% about that, where we do solar panel installation. So a variety of installation services, a little bit different on different markets. So you could say that over a business cycle, typically we say that about 50% of our activities go into to new constructions and 50% goes into renovation and maintenance of existing buildings. More in the waterproofing membranes, whereas more, you could say in the wooden facade and roof elements, it's more 90-10, going 90 into new build. We are mainly located in the Nordics, but we also have some activities in Benelux and in UK and in Poland. But we're very much, I would say 85% of our sales goes into the Scandinavian markets here. Oh, sorry, the Nordic markets. So which typically are more stable over time during a business cycle. So about what we do, I mean, it's of course very much about sustainability, and I will come back to some of the drivers for our acquisitions. But the durability of the materials we sell, it's typically above 50 years. So if you put a waterproofing membrane on a roof, you could. We don't have that extended warranty, but the material typically lasts more than 50 years if you put a bitumen-based waterproofing membrane on a roof. You could also say that the wooden constructions that we do in our factories and then assemble on the work sites it actually binds the carbon dioxide into the material rather than as other materials might do, like concrete, they emit carbon dioxide. If you look at the green infrastructure that we putting sedum on roofs or roof landscapes, that generates a biodiversity in urban environments. And of course the solar panel installations give some clean energy for the buildings, and you don't have, say, loss of electricity in the transportation or loss of energy in the transportation there. So looking at acquisitions, I mean, since 2016 when we IPO'd, we more than doubled in size the first 5 years here. And about 2/3 of the growth came from acquisitions and 1/3 came from organic growth. So what we're looking for when we do the acquisitions, it's to a large extent to find sustainable solutions into the building industry, construction industry here. But it could also be to enhance our products and service offering for our customers on different markets, or integrate downstream. So it would be a way for us to secure our products way out to the market by integrating downstream to closer to our customers. And looking at some of the acquisitions we have done, I think if I go back a few years, in 2017 we acquired the Tåsinge Elementor. That was the first step into the prefabricated wooden elements business. And in 2018, we acquired a company, Väggtech, in Småland in Sweden, where, again, doing these urban green environments. So it's a big driver for us to find sustainable solutions that we can expand our product portfolio with. So, but here are some examples. I mean, we also have this Ripatti we acquired in Finland, that is metallic facades, that is broadening the offering to Finnish customers, that to be a complete supplier to them in different ways. And if you look at the Anneberg Limträ, that was an acquisition in Denmark, where we acquired a glue lamp manufacturer that was actually upstream supplier of our Tåsinge Elementor business, the wooden elements business. So that's just a snapshot of a few different acquisitions we have done. Then if I look at the financial development over the years since we did the IPO, so you could say that we basically doubled in 5 years, and it's not a target we have set to grow for the sake of growing, but we expect to grow at the same pace with say 2/3 acquisitions and 1/3 organic growth, and over a 5-year period to roughly double in size. It's I would say here. And typically the organic development has been 3 to 9%, but I would say it's fair. In the recent quarter, that has mainly been driven by price increases that due to the cost inflation on input materials. whereas where we are heading now into a weaker business cycle for construction industry, the volume development can be expected to be negative. And if you look at the EBITDA, it's been fairly stable, I would say, over the years here, but it has been varying between, say, 11 to 14%, with an average of just above 13%. So it's a little bit better when we have a better business cycle, and lower, of course, in a weaker cycle here. But we're not going below 10%, and definitely not into red numbers here. So we've actually never had losses in the group for a year. Yeah. Okay, and if I take a short look at our first quarter as well, not going too detailed into that, but we had year over year, our first quarter was flat on sales compared to last year. But you could say that what contributed to that was a negative organic growth with -10%, where volume in particular went down 20%. Acquisitions helped us with 7%, and currency with another 3%, and that took us then to a flat development. EBITDA decreased from 91 million the year before to 30, and a similar development for EBIT. And then it's worth noting that we terminated 2 activities in that quarter that had an impact of about 18 million. So we came out on 7 million, taking away the impact in the quarter from that. And then cash flow was slightly more negative than the year before, with -58 from operating activities in the quarter. You would say that the highlights, I mean, one was that we had a large impact from weather. I mean, obviously our activity is very much dependent on good weather conditions, since you're working outdoors and you're working on roofs. And Q1 in 2023 was particularly bad with both snow and rain depending on what geography we were in. But we could also see that demand had an impact from a slowdown in residential new build, and renovation remained fairly stable in the first quarter here. So, but we expect the weaker demand from residential new build to continue, and at some point we also expect commercial buildings to have an impact there, with a decrease in new build for that area. And I also already commented the weather, and then also worth noting that our synthetic rubber membranes had an impact from a tougher market conditions, with the new competitors coming up being more price aggressive. So generally, we saw both an impact on volumes and margins for that segment. And then as well with prefabricated wooden elements, that had an impact from the lower residential new build, with a weaker market in both Denmark and Finland, where we actually saw an increase in Norway, however. And then our green infrastructure had a strong development in the quarter, but it is very weak. It's a very low quarter for that business, since it's you harvest green material and you put it on the roofs. It's not something you do to a large extent in the first quarter. And then just, if I mention the order book for installation services, where we have some 4 to 5 months sight ahead of us, so how it looks like it still remains on a good level on both volume and margins. Second, I would say that the negative development in result, it is the main explanation is the weaker volumes, and explained to a large extent by harsh weather conditions in the first quarter here. And also, as I said, the volumes being weaker in the first quarter, that had an impact. And as well, the one-off impact from closing down 2 activities. So what we see ahead of us is that we expect the construction industry to have some challenging quarters, and as a consequence of that, we of course take mitigating action. So when we can, we reduce cost in certain areas and try to adapt our costume to the market conditions to be prepared for the future. I would say that in 21 and also 22 had a large impact from high cost inflation on our input materials. What we see now is generally the cost has either stabilized or actually started to decrease for our main input materials. So and finally, maybe mentioning that, I mean, with the increased the higher interest environment where we have right now, when we look at new acquisitions, we're a little bit more, how to say, restrictive on how we view this, partly because of the higher cost for financing, but also where we maybe still have a high multiple environment and good years for the targets we are looking at in 21 and 22, setting maybe the expectations from the seller higher than we are willing to pay right now. So we still have a high focus on doing acquisitions, but in short term, we will do selective acquisitions where we find the multiples and the prices to be fair and reasonable. But otherwise, we might wait and see how things develop and before we do acquisitions. And I think I jump these numbers, but I think it's just maybe having a look at this one. It's if you look at the quarterly development for the first quarter, you saw that we had a lower EBIT in the first quarter this year compared to last year, and it's just worth noting that, I mean, the first quarter last year was exceptionally good for us. I mean, and we also had a reasonably good first quarter in 2021. But typically for us, it's the first quarter is a low quarter when it comes to profitability because of the seasonality of our business. I would say that the first quarter this year was probably a bit more normal quarter maybe than, and it's worth having that in mind when you compare it with last year. I think I'll pass on these numbers, and if there's any questions on these, just feel, of course, free to mail me or call me if you have something. But we have these been through these before. So if I jump to this one and explain our financial targets. I mean, we have 4 financial targets. One being sales growth, where what we say is we want to outperform the market, and we do measure this internally, but we don't have a set percentage externally how this should grow. But we will say that generally we feel we grow at least at the pace of the market and our competition, with the exception right now of the EPDM market, where we feel we are losing market share on selected markets here. Profitability we have expressed as ROCE should not go below 13%, and we are currently just above 13%. So what we see ahead of us is that it might go down below 13% for a quarter or a few quarters, but long term we should be above 13% here. And then the capital structure is that the net interest-bearing debt in relation to EBITDA shall not exceed 3 times at any time during the year. And we are today at roughly 2.0, so we still have some headroom for that one. And looking at the dividend policy, what we say is we should distribute at least 50% of net profit to our shareholders every year, and that we have done every year since the IPO, and this year we distributed 7 kronor per share. So that's sort of a direct return on share at about 5% right now. So yeah, having said that, maybe I'll stop there, Adrian, and open up for questions.
Absolutely. Thank you for your presentation. I'll go straight ahead with a few questions. First of all, you mentioned the weaker business cycle we're in at the moment for construction. Can you talk a bit about the direct impact on you? What type of volume growth for Nordic waterproofing we can expect for the current year?
Yeah, I think if we look at the top line, I mean, it consists of a couple of different factors, of course, where price being one, and the latest time when we increased prices significantly was a year ago in the second quarter last year. So when we've been a couple of quarters now had 13-14% in price impact, and we expect that to go down, and for the full year this year be pretty close to 0. Volume development we would expect for this year to underlying volume development, then clean from price effect, would be somewhere 10% down, possibly in the range 10 to 15%. I think is a little bit different depending on different markets, but somewhere in that range, I would expect it to be.
Okay. And is it possible for you to have sort of visibility beyond the current year on volumes? Do you have any take on when we should expect the construction market to start normalizing?
No, I mean there are say institutes doing this forecast when it's turning, and I think it depends a little bit on market. Some will say that it will still be negative next year, but not as negative as this year. But whereas some will maybe be a little bit worse next year than it is this year. But I think both 23 and 24 is typically somewhat negative, both of them. I think 24 you will start to see the things going up, and then 25 is a long time away. But I would expect that to be see a positive development in 25 if I dare to make a forecast.
Okay. And on the pricing component, obviously you were quite quick to raise prices when oil prices came up, with bitumen being an oil-based product. Now that oil has come down, are you going to be forced to lower prices at this point, or are you enjoying some higher gross margins at the moment?
I think we're quite, I mean, flexible listening to the market demand, but we have historically decreased prices, but we try to avoid to do that, obviously. So we rather work. I mean, if our customers need some support, we'll rather work with project discounts rather than lowering the prices. But it cannot be excluded that on certain markets we're going to decrease even price lists actually. But rather work with project-specific discounts when needed.
Okay. And in a typical cycle, when prices do turn down, how long can you sort of hold up your raised prices?
Sorry, how am I looking?
When oil prices do come down and customers start coming to you and asking for lower prices, how?
Say somewhere 3 to 6 months, but we can keep that up. But it also takes about 3 months for a change in cost and input material to pass our supply chain and come out to the customer, I would say.
Okay.
It's
and on the M&A agenda as well, you talked a bit about being a bit more selective with your acquisitions due to the higher interest rates. Where are the sellers at the moment? I mean, multiples on the stock market have come down. What's it like on the private markets? Are the sellers accepting lower multiples?
I think it differs, but in our view so far has been that the expectations are still a little bit too high, but we've always been quite careful on what we are willing to pay for acquisitions and what multiples we are willing to pay, and typically rather try to find something maybe where we buy 70% of the company and then we have an earn out or an option. So if we have a continued good development, we actually pay, assuming we keep the seller as management in the company, we then pay them for delivering a good result, let's say the first 2 to 3 years in the group. It's a bit more safe way to do it, and hopefully it makes the seller happy. He's getting well paid, and we get a company that has a good development, and it's so far proven to be a good model, I would say.
And looking a bit more strategically, are there any specific product groups or any specific regions where you are targeting growth through acquisitions at the moment?
I mean, one is of course to integrate downstream, where if there are areas where we can say find roofers to integrate, so we secure our products way to the market, and it actually goes both for our bitumen-based waterproofing membranes as well as the EPDM. Then I would say if we can expand into the green environment, so the green roofs, house parks, etc., urban environments in different ways. That's quite high on our agenda to see how we can do that. That's but it's call it opportunistic, but we don't exclude anything right now. I mean, another obvious area is of course if we can do something in say solar panel installation. We increased our shareholding in a Finnish company, Playgreen, from 33 to 64% some months ago, and if we can do that on more of our markets, it's something we look into.
Okay. One final question from my end, and then we're running out of time. Again, back to the sort of business cycle situation at the moment. In a weaker cycle, what are the things that you can do to sort of mitigate the worsening market conditions? And can you talk a bit about how historically your bottom of cycle margins have been like.
Yeah, it's no, but I mean, one thing, of course, is we try to adapt our costume. So looking at the organization, see where can we save cost. Are there synergies between different parts of the organization? And typically, if somebody leaves, can we sort of reorganize or do without that function for the time being until we see something different? So if you look at bottom line, I think our EBIT will. We saw EBITDA before was somewhere 11 to 15, and the EBIT will be somewhere in the range, say 7 to 11 or something like that, in the same range. So we still have quite a good headroom to the red numbers bottom line. I would say even in a weak business cycle.
Okay. And with that being said, I'd like to thank you once again for your presentation and for answering my questions.
Okay.
I'll just leave it up to you if you have some final remarks before we round off here.
No, I think you covered it as well. So, okay. Thank you very much.
Perfect. Thank you.
Okay.